Welcome to Chasing Returns. This is a brand new podcast that my friend and I are starting. This is just a passion project for us. We have these conversations all the time, so we figured why not record them and share them. I'll start it off. My name is JJ Gresco. My background is I play college golf. I graduated from University of Nevada, Las Vegas with an econ degree with a minor in marketing, and I'm currently in grad school studying my MBA.
And my name is Zach Workman. I started investing when I was 13 after my bar mitzvah. Just kind of mess around until middle of college when I started studying accounting and when I developed this borderline obsession with Warren Buffett and read all his letters. Those two things have really influenced me. And so, yeah, I think I'm finally at the point where I know what I'm doing, but I think that every year, and then I look back and I say, I don't know what I'm talking about. I don't know what I was talking about then, but yeah. And right now I'm an auditor for a Big Four accounting firm.
And then I didn't mention this, Zach brought it up immediately. Yeah, I've been investing since high school. So it's been, I don't know what, 7 years, 8 years. You started a little bit earlier than me. But I didn't really start taking it seriously until probably my sophomore year of college. Of where I started actually developing and getting a decent amount of money in my portfolio. But yeah, and I'm even behind, I would say, Zach in some things of, yeah, you always look back the year prior and you're like, oh yeah, I didn't know what I was talking about. And I listen to you talk sometimes. I'm like, yeah, there's certain areas that you just know way more than me. But hopefully we complement each other well with some of our knowledge on this, and we have some good conversations that we can share. So we have some topics for today. I think Zach wanted to kick it off with some current news going on around our favorite company that both of us are heavily invested in. So you can start off with that.
Yeah, I got the Berkshire Hathaway annual report right here. But I'm going to be talking about the moves they've made in 2022. So basically, they entered the year with what I estimate to be around 100 billion of excess cash, which is quite a sum of money. But since the start of the year, in just the first 3 months, they've put to work 25 billion of that, or they've pledged 25 billion of that in 4 primary things. And that's just what we know. That's publicly disclosed. There could be a lot more, and we'll find out in about a week when they file their 13F. But so 2 billion of that was buybacks. And the only thing I have to add on buybacks is I highly doubt they're buying back shares at the current price, which is 355. The highest that we know they paid was probably 315 or 320. And then next is Occidental Petroleum, which they revealed about a month ago. And when you combine the purchases they made in early March with the warrants they have to purchase more shares, they own about 20% of the company now. And so Occidental is really interesting. I did some work on it. I found that if oil is $100 throughout 2022, Oxy will generate about, I think it was like 15 to 17 billion of free cash flow. And at the price that Berkshire was buying, which I think their average cost is 51 per share, that's a market cap of like 55 billion, enterprise value of 85 to 90 billion. So if oil, I think oil could go down as far as like 65. If oil's average price over the next few years is 65, then Berkshire's investment at its cost basis should work out really well. And then the next one is, they just disclosed it yesterday, is an 11% stake in HP, which manufactures computers and printers. And I think what Buffett really likes about this one, I'm guessing this one is Buffett based on the size. It could be one of their 2 other investment managers, but I'm pretty sure this one is Buffett. And I'm thinking what he likes on this one is that it trades around 10 times earnings, and it has a very high return on invested capital. And this is mostly because of their immense negative net working capital balance. So basically, they have a cash conversion cycle of like negative 30 days, which means they basically get cash 30 days before they make a sale. It's kind of an interesting topic because Um, well, that's not the way to think about it. They get cash, and then 30 days later, they pay their suppliers, basically. So they get cash 30 days before you would expect them to. And that's basically a huge source of zero cost financing for them. And it pushes their return on invested capital through the roof. So I think that's what Buffett likes about HP. And then lastly, they announced a nearly $12 billion acquisition of Allegheny Insurance. And the way I think about that one is they spent $12 billion, and in return, they received a $22 billion portfolio, and which is mostly made up of bonds, but there's some equities in there, including like Microsoft. But you might say, well, that doesn't make sense. How could they spend $12 billion and get 22 billion of portfolio in return? And it's because they're also taking on like 13 billion of insurance liabilities, or float, as Buffett calls it. And what's nice about float is it's essentially, if you do it right, if you have very competent managers, it's essentially like having debt that doesn't mature. Its maturity is just super far out in the future, and it has zero or even negative cost. So that's basically the key to Berkshire's success, is their masterful use of float, which I won't get into in detail because I'm not an insurance expert, but that's definitely what attracted Berkshire to purchasing Allegheny. And one more note on Allegheny is there is about a week left for its where they can solicit offers. So a week from today, I believe, they can't solicit offers anymore, and Berkshire will be able to finalize that acquisition. So yeah, do you have anything to add about Berkshire's recent moves?
Nothing to add. I guess I'd probably just follow up with two questions towards for you actually. So one thing is, because I know this is something we've discussed, obviously off camera, as we always usually do.
Yeah.
But do you think right now, what do you think the future for Berkshire stock price the rest of this year is, and do you think it's a current buy at its current price?
I can't predict what it will do in the short term. But the way I calculate intrinsic value per share, I have it around like 350 now, and I think the stock closed at like 355 today. And the way I calculate it is just the way Buffett outlines it in his 2018 letter. Obviously, there's still a big range because you have to make assumptions about how much of the cash pile is distributable, what's the proper multiple to put on operating businesses. But basically, I think Berkshire is trading at intrinsic value today, which means I think if you're buying today, I think over the long term, it will do like 7 or 8% from here, which is still attractive, but it's not the screaming buy it was throughout 2020 anymore.
And that's the reason why I was bringing it up, because I remember us having that discussion, and it was always well below what you believed in the true value of the stock was. Just based off of obviously everything that they own and are invested in. And then what was the other part I was going to say on that? I had two parts for you. I'm trying to think. One was, are you going to be adding to your position at all, or are you pretty happy
Berkshire
position right now?
I've actually trimmed it a lot over the last year, but that was mostly because it was just a huge position. It ran up a lot, and I thought it was getting close to intrinsic value. So I trimmed it to redeploy other places, which is probably a mistake because honestly, if you take Berkshire out of my portfolio, I have not done well. But I nailed that one. I put 50% of my portfolio in during COVID. So, but yeah, I'm happy with the current size. Yeah.
Great time to buy. Yeah, I'm pretty content where mine's at. And yeah, it's one of those things. It's interesting. Now it's at fair value, and like, compared to other stocks that especially I buy, or most of the public is buying right now, it's like Berkshire should be extremely attractive to them, with some of these stocks trading so forth. It's just crazy with some of the earnings. I know your favorite is Tesla, but
right.
Which I am still very smally invested in. I cut most of my position, But it's just interesting that, like I said, we're usually looking for stocks like that, and even though it's currently at that, we're not buying. And looking elsewhere. Obviously, you're looking more for extreme value plays, as am I, but I think I'm probably a little bit more open to investing into, like I said, not stocks that might be still trading forward, like especially in tech. Yeah, and then I think the other reason I was going to bring that up is that you touched upon them probably not buying back shares currently, anymore, at least, because I know that was something that we had been discussing at length, was that they were sitting on a ton of cash throughout the past year, and it's like, when are they going to redeploy that? And especially as stocks started going down, it's like we just kept waiting for news to come out, and you figured it eventually had to happen. And it luckily, like I said, I think the way the economy has gone, that opportunities stayed around and became more available as this year has gone on, which, like I said, I think they obviously had no idea that, some of the certain things that have happened this year were going to happen. I think it was risky for them waiting as long as they did, but obviously it is paid out. And I'm sure they're not done probably making moves. But they ended up buying back some shares at a lower price, but they ended up buying back later than you probably would have wanted, I'm guessing, correct?
You mean during COVID?
Yeah, or even slightly after, because it's like even into like 2021, it seems like we kept waiting for them to do that, and it wasn't as apparent with the amount of cash they were sitting on.
Well, I'd say during 2020 and 2021, they put probably 100% of their free cash flow into buybacks.
Okay,
they did a good job with that. They bought back like 10% of shares outstanding. And I think the average price was around like 230. And the current price is
so
3.
they did. Okay, so they did very well. For some reason, I was remembering timing wise is that like there was like a gap of a year where they weren't really doing anything with anything, and then eventually they started buybacks, but then not acquiring any other companies, because they're so big that, I mean, they can't, buying like a small company to them isn't even worth it. Like, really, it's not affecting things. It's like it's a lot harder for them to find a large company that is fair value, especially in the way the market has been the last 2-3 years.
Yep.
Obviously less this year, but coming up into this year. So that's just something interesting to look at. And obviously, great company, and probably, I mean, it's one of the best performers of this year, isn't it?
Oh yeah, 2022, it's been amazing.
Yeah, exactly. Yeah, it's one of the only reasons why I haven't lost a ton of money either. Because I'd say I'm probably like 20%, I think, of my portfolio is in Berkshire. At least my main brokerage account. My second brokerage account is more of the more speculative plays, but
nothing wrong with that.
Any more thoughts on Berkshire?
In the words of Charlie Munger, I have nothing to add.
Not bad. Good plug there. But yeah, okay, so we'll go into some more news. Elon, after a Twitter poll, which I think was kind of a big foreshadow that he was probably going to, has acquired 9.2%. Has become the largest individual shareholder of Twitter, and has joined their board of directors. What are your thoughts on that? Obviously, I have a couple, and I think a lot of people are kind of either thinking too much of it in a good way and a bad way, and it's very entertaining to see, because I don't think many people truly understand really what his position is right now with Twitter.
I have no thoughts on that. I'll share something real quick, and then I'll let you share your thoughts. Okay. So Elon filed this. He filed a 13G at first, which is like, it's supposed to be for passive investors. And he filed it way later than he was supposed to. So there's a little bit of outrage about, well, if he filed it on time, the stock would have gone way up, and he wouldn't have been able to keep buying at his average cost is like 36.
Yeah.
So there's some outrage there.
Yeah, and you saw the huge spike right after.
Yeah, it went up like 20% or more. But he then the next day he filed a 13D, and that gave some more information. He was buying all the way back in January. He started in January 31st and bought basically every single day until April 1st. So, and yeah, his average cost was like 36. So he basically bottom ticked it, and yeah. But I'll let you share your thoughts on why he's doing it, maybe, because I don't know.
Yeah, I mean, I don't think really anyone knows. Obviously, the Twitter poll, and maybe we'll put it up here, but I think he asked around the free speech question of, is Twitter doing a good job with it? And I think majority of people voted no. At least at the time I saw it. Didn't see it at the conclusion of the poll. Obviously, that prompted part of the reason for going public with it and maybe joining the board after he did that. Or maybe that was all just, kind of to build up hype. Who knows?
Mhm.
Elon does as Elon does, and it usually always works in his favor somehow.
Yep.
And I'm a huge fan of Elon, so I'm not trying to bash him. It's very interesting. He's a very interesting human, and just obviously everything with Tesla and promising too much and then not delivering, but then still making a good product and still having such a loyal fan base. It's a very interesting dynamic that I feel like we have not seen really in the marketplace. But
Yeah.
I think him joining Twitter, I mean, I think that's a good thing. It's one of those things of, it's not like he can, he's the dictator of Twitter now. He only owns 9.2%. He doesn't have majority share hold over the company. So he can't make those decisions by himself. Now, maybe, he has a lot of influence because of who he is and his public,
Yeah.
image.
Yeah.
And the fact that he has such a large Twitter following that then, he can show that stuff and then go. I think it's kind of silly with some of the Twitter polls. Like one was would you want an edit button? I see a lot of issues with that, especially with the fact of like, okay, couldn't you just theoretically tweet one thing, have a bunch of people retweet it, and then change it? Like I won't go into
Yeah.
specifics of who is about, but there was a very controversial figure that retweeted a random person's retweet that went viral, and they didn't like that person specifically, so they changed their header, like their name, so on that person's Twitter account was a joke about that person. And it's like, that's like basically what editing would do to an extent. It's because it's like, what if you tweeted something and a famous person retweeted and then you completely changed what it says, and then now that's public on their profile? It's like, that's a dangerous game. I get it for typos and stuff like that, but it's just like, you can delete it right after you post it and just redo it. So I don't fully get it. Like Instagram's different because you're posting the photo. You can't change the photo, but you can change the caption. That makes sense. Twitter, though, it's like, it's just words. So if people are liking what you originally said and then you change it, it's like, then shouldn't the tweet just be deleted? And it should theoretically be a new tweet. And maybe there'd be limits to, like, you can only change letters, or if there's a typo that they see, you can change. Who knows? But then it's like, why don't they just find a way to prevent that in the first place? Kind of like Word, it shows that you misspelled something. But yeah, so I think kind of some of that stuff is silly. I don't know if it's just for PR or to show like, oh, I'm going to change stuff. But yeah, it's one of those things. I don't really see much change happening. Twitter to me is kind of pretty locked into what it is. I think it's an amazing platform, and just the fact that it's amazing that it's free. I always joke, I'm like, the only three things like I feel like people need nowadays is like, it's YouTube, it's Twitter, and then I don't even know what the third one is. Oh, eBay. YouTube, Twitter, and eBay. Those three
I don't ever use eBay.
Yeah, the fact that those three things are free is like,
Okay.
just does not make sense. Because YouTube, you can look up anything, learn anything. You can create business on YouTube. Twitter, you can have a voice, interact with people you'd never be able to interact with. And then eBay is just a safer Craigslist in my mind. The fact that you can literally buy anything, find the most obscure thing, and then also sell anything to make money back. Like those three things, the fact that an individual person that like 20 years ago had no power, or, no like way of doing a lot, like not having a voice, like I said, that could go public, not being able to interact with things, and then also not being able to get rid of junk easily or be able to buy or collect things as easily across the internet. Like those three things have changed everything in my mind. But Twitter, I think, is pretty locked in. But yeah, it's just the big thing is obviously it's the free speech thing. And it's one of those things of, it's like, that's been an ongoing thing. That's been a thing that one side of politics has been arguing about the filtering, but it's like there needs to be some filtering. So it's like, you can't win in that, and I don't know what Elon's going to be able to do to really change that. It'll be interesting to see, watch, and I'm sure we'll cover it if there is some groundbreaking news that he does change. But honestly, I don't see much of it. The only thing I see is Twitter not going off maybe the deep end, if that makes sense, of, maybe doing a bunch of wrongdoings or something like that. But once again, I don't know what they could really do. Maybe you see less people getting canceled on either side, but like,
I feel like Twitter though is already not very censored. Like you can see a lot of violence and other things on there.
like I said, the issue is more, which is, like I said, been an issue that people have been talking about and Elon has brought up, is the fact of people getting removed. It's not so much about, like, tweets get removed a lot, but like not to the extent. A lot of stuff is allowed. But then the whole thing is, it's like, if a lot of that stuff is allowed, then why are people getting removed? And like I said, it's a whole different conversation. But it'll be interesting to see if he does have any impact on that. Obviously, the big one is the former president not being on Twitter. Like, was a big shockwave to a lot of people. Whether it was right or not, I'm not going to say, because I don't really know. Like I said, there was a lot of problems with that, but at the same time, it's like, if you stand for free speech, the fact that a president is no longer on the platform, that's kind of weird to think about in a way. But it's just going to be interesting to see. I know a lot of people were speculating that Elon and like would spin off and do his own thing, and then like have Joe Rogan like leave Spotify and all this stuff, and like, the rumor mill and everything, and just any controversial figure that has a big voice that people don't like. I just think he's an entertaining figure, Elon, that is. Like I said, I really respect his companies. Like I said, what he's trying to do for the world. I'm hoping, like I said, he is good at heart, as it seems, and that's why I think he has his following. But yeah, I think more of this is just hype. I don't think there's much change he can really do. It will be interesting to see, though, like I said, if anything does change majorly, but I think it's just going to be business as usual, and he just owns the percentage of it. I think he's probably just wanting to buy into one of the biggest social medias that people are using that probably won't die. Like, Instagram might not be around forever. Twitter is going to be hard to replace, I think, just because of how simple it is. And you don't really get tired of Twitter either. Like, I mean, I get most of my news from Twitter now. I'm sure you do in a lot of ways as well. It's like it's turned into more of an open forum than it has anything else. And I don't even tweet. That's the crazy thing. Like, I rarely tweet, yet I'm on it all the time. And like, that's not many platforms that are able to do that. So I see the longevity in that. But yeah, I don't see much of it. So I've kind of gone on a lot about that, and not really added much to it. But I think it's an interesting purchase, and yeah, we're just gonna have to wait and see what happens.
Yeah, I have nothing to add on that.
Yeah, just Elon being Elon, things always being in the news somehow. Did you see Tesla's April Fool's, or one of the articles that was going out? Ironically, it got one of the people I'm around, and he should have known that it was a joke. But they said they're canceling the Cybertruck and they're refunding everybody.
Oh, I didn't see that.
Yeah. Which obviously was an April Fool's prank. I don't know if it was necessarily directly from Tesla. I think it was, or it was just an outlet. But yeah, it was funny. But
it's gonna be weird to see those on the road.
Well, like the big thing to me was because cars like have to crinkle, like they can't be like a tank because of it's like wrecks. They have to be able to like be destroyed, and that's supposed to be indestructible. That would that's the big worry, is that wouldn't that destroy the other car, which then would put other people in harm's way. It's like that, and so that I know that was a big worry, and maybe that's why it's stuck in production. It's because they're trying to figure out a way to make it in the heavy materials, but then also make it street legal. So I don't know, but yeah, it's gonna be interesting seeing those. I'm not a big fan of the look, but obviously it's the uniqueness and it's their brand and it sells. Because I do think it'll be a cool vehicle. It's just not for me.
Yeah.
But yeah, what was I think we had a third topic. Do you remember what that was?
I think a brief discussion on housing, maybe.
Oh yeah. So through a friend of mine, this was getting brought up of rates are, getting increased 4 or 5%, and to people, our age or maybe a little bit older, as we're obviously still entering the workforce or starting to finally, make money post college. we're not used to 4 or 5% mortgage rates. Like we've been seeing it, obviously, below 3 and thinking that that's normal, but really 4 to 5 is actually pretty normal for most adults. But we're the young adults are now maybe finally being able to afford their first home or wanting to buy their first home and maybe move out of their parents or finally, stop renting. And a lot of these, people that maybe have, especially for spec homes that, maybe got pre-approved, but didn't sign a contract, you locked in your mortgage rate or not locked in, got pre-approved for maybe around 3.5%, but now it's up to 4.5. And it's like, that's an extra $400, $500, $600 a month. Most people aren't gonna be able to afford that. And if that's the case, then you might see a lot of houses available, especially this summer. Because I don't know if you've been seeing it, but I've been watching a lot of videos and reading a lot of articles of record homes becoming available this summer. Now, a lot of them might be pre-sold, a lot of them might not be, but if people are not able to afford the new rates, housing might be in trouble this summer, which obviously then might cause issues elsewhere. But I don't know if you've been seeing that or if you have any thoughts on that. Obviously, neither of us in our position to buy a house right now, but obviously I'm sure it's something I always just look at because obviously I would like to own a home at some point. I think you might be wanting to wait a little bit longer, but have you been paying attention to that at all? And do you have any thoughts on that?
The only thing I've noticed was that, yeah, mortgages went from under 3 to they're like 5% now. But yeah,
it's gonna be fascinating because I mean, not to be like hawkish, but it's just like at some point this has to either level out or go down at some point.
Yeah.
Like I said, I'm not saying it's going to crash, but theoretically, if rates go up, prices of houses should go down a little bit to offset the change in interest. And we haven't seen that largely because we don't have enough supply. But eventually, supply is going to catch up. Rates are either going to stay the same or continue to go up. Don't see how that continues with prices going up. Like it's not looking good in that sense.
Right.
So it may be a buying opportunity if you have the means, but then the problem is usually when that's, usually the economy gets hit then as well. And then people, also get their pockets hit as well.
Yeah. It's the opposite of 2 years ago. I mean, when mortgages went under 3, I have a friend who bought a home in summer of 2020. He got a sub 3% mortgage. He renovated it himself. And obviously the house skyrocketed in value over a year and a half or so. And he made a killing. He timed it perfectly. And now you're going to have the opposite potentially where home prices come down, people are locking in higher mortgage rates. But that's why I don't know. I don't know anything about real estate. There are a lot of smart people in real estate. So I know if I moved into that area, I would get destroyed. So like I'll stick with stocks because I think that's what I know best for now. And I'll buy a home when I actually need one.
Yeah.
But
like I said, I think for me, it's not so much that like, I feel like I know a decent amount about real estate, not necessarily all the ins and outs and, about renovating and trying to make a profit, but at least, understanding the way the market works and, understanding what I want and understanding, new versus old and the tax benefits, especially if you have a rental property and all that stuff. But aside from that, the biggest thing for me is just, it's like, okay, at what's my price range? Like ideally that I would want to buy, how new is it or what area is it in? And then it's like, how much is that going to cost me per month at the current rates? And just like looking at that and it's like either thinking it's like, oh, like this is extremely affordable or now seeing the rates. And it's like, oh, like this is going to take a while to be able to afford. And it's just like, other people are going to be in the same boat. And it's a little scary. But the bigger thing is, it's like I said, just wanting to pay attention so that if prices ever do come down, it's like, oh, like now's the time. If I'm able to, this is the time to acquire a house. Because right now I would say no. And last year I would say definitely not, unless you needed it. Because like I said, some people, either you're starting a family and you do need a house, or it's just the fact that you've been saving up and you don't want to be living with your parents, or you don't want to be giving money to, a landlord anymore. It's like, I get it. But if you have the means to wait, it's like I definitely would be waiting right now, because it seems like opportunity at some point. It might be 2-3 years. Because another thing I was listening to recently today was talking about like the '08 housing crash, and it's like you didn't really see the big effects until like 2010, 2011, because foreclosures take time. So you don't see that take effect until a couple years even later. So even when, like I said, the crisis is at its worst, you don't see the effect on the housing market actually until later. There's a lag. So it's just going to be interesting to see if we do run into that, how long it lasts, or when the bottom actually is. But we'll see. Like I said, the biggest thing though is none of this is going to happen unless supply catches up though. That's the only thing that can really cause stuff. Because yeah, rates, like I said, theoretically should, but if there's still more demand than there is supply, people are still going to be buying. But it's really all I got on that. It's just interesting. Like I said, is I have friends, and you have probably friends that are looking to buy houses, and I have a couple friends that are real estate agents and whatnot. And I would like to own a home at some point. So I'm just planning for the future and just trying to learn the industry a little bit better.
Well, the only thing I'll add to that is you mentioned supply needs to catch up. Well, what's interesting about commoditized industries is that when you have this huge imbalance, like prices run up and then you need supply to catch up, well, then companies will ramp up supply and then prices will come back down right when all that supply hits. So they're very cyclical businesses.
Yeah.
They're very insurance is like that, obviously oil, gold.
Because everyone's trying to capitalize on it while, strike while the kettle's hot. It's like you see the opportunity, everyone piles into it.
Yeah,
eventually it catches up, and then you overdid it, and then it goes the opposite way.
Warren Buffett's analogy is like if you're in a crowd of people and like someone in front of you stands on their tiptoes to see something out in the distance, well then everyone's going to do it.
Yeah.
And then you're just in the same position.
Yeah.
But yeah.
Well, the bigger thing too, even, I mean, this is maybe a worse example, but the thing that's coming to my mind is, and this is a better example for another scenario, but it's coming to mind is like during the gold rush, it's like everyone rushes out to California to get gold, but then really it's like the money was really made in selling shovels. And it's the fact of it's like everyone's going out because everyone wants gold, but because everyone's wanting gold, gold's already gone. And it's the fact that then you're kind of left with the fact that, like, there's just the supply is gone, demand is still there. Then there's another industry that people can capitalize on. This and that scenario, like I said, they're falsely selling on another area, but it's just like the demand shifted from one, and then the smart people went to the next and then piled in and were able to, it's the same thing. Like I said, at first, like I said, it's houses, so you pile in, real estate agents can sell everything that's available, but then it turns into the builders and all of the companies that, then want to produce, and then it's all the contractors and the construction crews that can then build more homes, and you want to build as many as possible while people are buying them up. But then it's like eventually you're going to build so many that you actually get yourself almost out of a job because there's too much supply all of a sudden. It's just going to be interesting to see. Like I said, hopefully it benefits our age group at some point of where we actually can get into houses at a decent price, because I feel really bad for, like I said, some millennials and then even some people that are Gen Zers, because there are some of us that are able to afford a house currently. And it's like if that gets hit, that's going to be a big, looking at your net worth, that's a big hit. And you might be paying a mortgage that, for a house of a price that is not there anymore.
Well, yeah, Charlie Munger said like a month ago or 2 months ago, he said our generation will have a much more difficult time growing wealthy than past generations, just because asset prices are bid up to the sky, basically.
Yeah, well, it's like, and things have to basically trade, years ahead to actually continue growth. Because if things theoretically ever were to come down to true value, like with a lot of stocks, it's like it's going to take a while to actually get there. Yeah. Anyways, I think it's been a good talk. Like I said, hope to continue to do this weekly. Hopefully we'll get better at this over time, have better talks, be more entertaining, and just improve. But this is something, like I said, we both enjoy. And yes, thank you guys for tuning in. Thank you for watching, and we will see you next week.
Peace out.